All right, today was one of those interesting days in the market where good news was not good enough, right? We had a really good earnings report from Nvidia. The market loved it overnight. I loved it at the open today and held on to those opening gains for probably about an hour. And then things really dropped from there. And not only did we lose the gains we had, we actually experienced some pretty significant losses. Volatility surged today. The breadth cracked some really significant numbers. I'll share with those. We had a significant rotation that's going on. That continues to play out, one that we've been kind of anticipating and we're getting. So I'm going to break all of that down in today's market outlook preview video. So let's go ahead and get started. Today is Thursday, November 20th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Before we get going too far, click this link in the top right corner of your screen. That takes you to this page where you can subscribe to Market Scholars for free, because by clicking that button right there. When you do that, you get access to all of our Market Outlook blog posts. This is what last night's looked like. Has the preview video at the top. And then all the information. Now, you're going to want to do this today because tomorrow's Market Outlook blog post will have the full version for free for all of our basic subscribers. Every Friday, all of our basic subscribers here get access to the free full version. So you want to subscribe tonight so you can be able to get that tonight's blog post as well as get tomorrow's full version of the video for the weekend. If you click this link, that will take you directly to today's blog. If you're not logged in, this is what it looks like. So just click the login button down here at the bottom. If you're not subscribed, just hit this join free button. It'll take you to the basic page. Click the join free, scroll down, and that's all you have to do. And within seconds, you're right on, you're subscribed to the site, and you have access to all of our Market Outlook blog posts going back. You can see access to all of them there by just clicking on Market Outlook in our main menu and going to the video archives. All right, let's talk about what happened today. So the big news today obviously was Nvidia. Nvidia's earnings came out last night and we gapped up above moving averages, looking great at the open, but it sure did not last long. In fact, for Nvidia, it didn't last long at all. The S&P did okay. It held up for about an hour or so before it started filling in the gap. But Nvidia was almost immediate, right? We went up, it's been vacillated a little bit, and we just started filling in the gap and then ended up almost with new 4-week lows, like right at the 4-week low. Not a good sign for the stock. Not a good sign for the sector, right? If you look at, I mean, there's the S&P, but if you look at SMH, it's breaking down below that 50-day moving average. That's pullback territory now. Here's XLK also doing the same thing. When you look at the ratio charts, let's look at the ratio charts here of SMH to the markets, because it is a leading industry right now in the markets. The ratio has an 89% correlation with the markets. The ratio chart's breaking below the 50, so it's set up to start filling in that gap down to the 200-day moving average. The long-term PPO is falling. Even just looking at SMH relative to technology, also 83% correlated. Again, big gaps. Like, we don't like to see these big moves. And finally, here's XLK relative to the broader market, and it's not looking pretty. So that's kind of the big news. Of course, because of that, breadth was horrible today. Like, you know, we've already talked about this big divergence between the number of stocks above the 50-day moving average and the S&P. Well, and we talked about for a long time that it was start to resolve itself. Well, it's resolving itself. And we are well in the bearish territory at 160 stocks that are below the 50-day. There's we're almost below the 50% mark on the number of stocks below the 200-day, which is not a good sign, right? That's usually more than a pullback. So that's not a sign that we want to see there. It could turn this into something more. So hopefully we kind of hold and bounce off of that, which is a very real possibility. And then finally, if I look at the, let's look at the trend, you can see all the volume. That's a big move higher there on the trend. It means we have a lot of declining volume relative to advancing volume, and that's a bigger number. So the ratio here is a bigger number than the ratio on the advance versus decline. So that's kind of what the trend is telling us, and that's more bearish than if it was a smaller ratio. Here's the advanced decline line, very negative, right? And you can see that the 20 that's a 10-day average. The 10-day average, a 2-week average, is down to below minus 300. That's the lowest it's been since the last time we were in pullback mode that led to a correction. So very, very bearish, big collapse in the breadth. The McClellan oscillator is kind of another sign of that. I showed you before that we had crossed below zero a couple days ago. Well, I mean, we are sharply dropping. We're minus 66. Now this is getting to a pretty low level, but getting to minus 100 will really be a nice opportunity for a bounce. And so it's pretty strong, but it's not extreme, and so like it's not washout levels. And none of these breadth indicators, they're all strongly bearish, but they're not all like extremely or at washout levels of being bearish. If we take a look at the VIX, we saw kind of what the VIX did today, jumping up to the 105% mark relative to the VIX 3M. It will show up here in just a second. Here, let me see if I can switch maybe to a daily chart. There it is. We were at the 105% mark today. We're well above the 100% mark. I told you that as long as the VVIX was above 110, that we were susceptible. You can see the VVIX at 128 after opening down below 110, but we were susceptible to a move like to this kind of candle. Now, fortunately, it didn't, the open wasn't near the close, that we gapped down before, but still, one of the bigger candles that we've seen. This is one of the bigger, it won't be one of the bigger price moves in terms of, where we were at by the close. It's actually pretty small. But when you look at the range in terms of where we were at the lows, I mean, shoot, we were down 12% at the lows and we finished up 11%. That combination is a sharp reversal. You can see we haven't, every other time we've been this bearish on the gap down, we finished down. And some of these others, we finished down there, we finished down there, we finished down here. So this is the first time in the past year, at least, that we've had more than a 1 standard deviation drop. In this case, more than 2 standard deviation drops to the gap on the downside. And then we ended up finishing with one of our bigger moves up to the upside. And then finally, the rotation today, again, just continues to show just how bearish we are. It's a clear rotation into safety trades. And that's still working itself out. So when I was on with Charles Payne a month ago, I talked about staples and utilities and this hanging out in those areas, healthcare, hanging out in those areas because they will hold their value better. Well, since the market peaked, on October the 28th, so from that point forward, you can see those are the areas that are holding their value better. Staples and utilities and healthcare. Energy's up there too, but you're down 5% on the S&P from that peak, and you are, and you can see like XLK is down 10%. I mean, these are the cyclical areas. There's a clear rotation, and as of right now, that rotation is still going. Right, you can see like there's healthcare, there's staples and materials, there's utilities and real estate. I mean, these are all sectors that when they outperform the markets tend to be bearish. And there's your three, your XLY and XLC K, and then XLC here. And we're gonna kind of play this out. I told you yesterday that we were probably 3 to 5 days away from the low of this pullback. Now we're 2 to 4 days away from the low to this pullback. I don't think we're tanking. I don't think we're going to be dropping off a cliff. But I don't think we're bouncing up soon. I still think but through some ups and downs, we're probably still a few days away before we finally hit the lows. And I would say, in the full version of the market outlook, I kind of go through where the levels would be or how far down I think we can go, kind of in a worst case scenario on this pullback. What if it turns into something more? So all of that I break down and in the full version, and that does it for today for our preview version of the market outlook video. If you'd like the full version tonight, click this link up here. That will take you to subscribe to our foundation tier, and you can get access right away to tonight's video and every other market outlook video. With that, you get the trades that we do. We always do one trade at the end of every market outlook video. We put those trades on in real time, and we manage those trades in real time. And we do that every day at 3:30 Eastern time with a live stream that's done on our website. It's called the Market Outlook Live. So you get access to that, and you also get access to our Market Outlook Live trade tracker. So we actually track the results of all the trades from the market outlooks throughout the year. And just to kind of give you an idea, for $29 a month or $299 a year. So you get 2 months for free if you sign up for the yearly version. The trades themselves, just risking $500. I think we've risked on average over $600 per trade. Some trades we risk 500, some trades we risk 1,000, but we're risking about $600 per trade, and we're up almost $10,000, over $9,000 on all the trades that we've done this year. So $299 is a pretty good value for what you get, and that doesn't even include, again, the commentary and the education you get out of the videos on a day-to-day basis. So thank you for watching the preview today. Subscribe to our YouTube channel, this icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment and share the video with anybody else you think would be interested in it. Follow me on Twitter at DavidSettle42 for more content between the videos. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.